You know how to draw out FVGs, you know how to draw out order blocks, you know where they are, you know how they look. You have seen them a million different times. You probably also know what a BPR range is. Now, if any of these terms don't tell you anything, then go to my main channel, check out my masterclass. But for anybody that is already familiar with those, this is perfect for you. Because my point is, you know all of these terms and you know how to draw them out. Yet you're still unprofitable. So how is that? You know all of the different things that a profitable trader knows, yet it doesn't work. Well, because the strategy is oftentimes not the problem. The problem is you not being able to execute your trades on a day-to-day basis. So this is what we're going to be doing now. I will be live trading for you. You'll see my entry, stop loss, take profit, my exact approach onto the markets that basically led to my account right now, which I'm going to be showing you in the end, has led to over 1K in profits. And this is like what, day 7, day 8 or something like that. I basically lost track of that. And yeah, it's really that easy. We're going to get into the things right now. So firstly, we want to get onto the charts at the earliest 8:30. Now, somebody has asked in the comments the other time, I have gone onto the chart, a little bit later. Why is it like 1 hour past 8:30? 8:30 is only going to be a requirement in terms of that's like the absolute earliest that you're going to get onto the charts. You can get later, you can get, you only can get later pretty much, okay? Earlier is not allowed. And you can take a trade up until 14. This is, by the way, all New York local time, okay? This is not going to be UTC, New York local time. Okay, anywhere in that range, you can take a trade. Now, of course, depending on if you're going to get closer and closer onto 14 or 2 p.m. basically, then you would rather want to avoid trades. But as long as you're, somewhere in the middle, somewhere at the beginning, even somewhere in here, that's like sort of the blue one. The blue zone is basically where you don't want to be taking a trade anymore, or rather not. But anywhere in here, that is fine. So let's just firstly go on to the 50-minute time frame. Now, previously, I would have said that the range is going to be this one, but now it's pretty much the same principle. I want to ask myself what is going to be our low and our high. Our range high is going to be this one. Our range low is that one. Very easy. Okay, so range low, it's going to be, and then we're going to be having our range high. Now that we know that, we want to ask ourselves, where do we want to trade into? Is it more likely to trade into the range low or the range high? For that, we need to check out the higher time frame. So let's just go on to the daily time frame and see. I would much rather say that we're just going to trade on to the upside again. Even though if we go on to the 15-minute time frame again, it looks like we just got to go for the low. And there's a good chance that we are going to get into that low again and create another low and then trade higher. But overall, I believe that the bias is going to be bullish for today. And once again, if you're going to pay attention to the daily time frame, it is clearly telling you that because of two reasons. The first reason is going to be you have a price action gap in here. Okay, there's an actual gap in the price. We need to refill it. Okay, we haven't traded into it yet. Now the second one is going to be every single day is either going to be taking out the previous day low or the previous day high. Rarely you're going to be having a day like this one. Okay, we have not gone for the high and we have also not gone for the low. This is more of a rare occurrence. So we are probably going to go for the previous day high. Now we go on to the 1-minute time frame. You see we are already taking out the low. Once again, that's not sort of an issue because once again, I am looking out for higher prices anyways because of the higher time frame. And from this point on, I'm looking out for liquidity rate, which, often has already happened. We have traded lower, but I'm looking for some internal. It has to basically occur within the range that we're looking at. Okay, so the low has been taken out. Now, the last thing that I'm looking out for is what I like to call MC. MC starts or states for movement candle. Okay, a movement candle is going to be a candle like this one. Big candle onto the upside. Not this kind of candle, not this kind of candle. This is, sort of already somewhat what we're looking for. Not this kind of candle, not this one, not this one. Okay, so see, this is the kind of candle that I'm looking out for. Big body, small wicks, and then just onto the upside. So that is basically going to be the entire plan. What I also like to see in this entire price action is going to be the fact that, you see, if I mark this out, you're going to be able to spot it. We're going to be having an entire BPR, and this is on the 5-minute time frame. So that's just additional information to me that probably we need to trade higher. That's going to be BPR, 5-minute time frame. Now, this is going to be an imbalance, okay? Imbalance. The reason why I want to trade into it to begin with is because imbalances need to get rebalanced, okay? This is fundamentally what the price action is doing on a day-to-day basis. All it really does is creating imbalances, rebalancing those. Creating imbalances, rebalancing those. You can also see it this way. Creating imbalances, rebalancing those. Creating imbalances, rebalancing those. Do you see a pattern? All of a sudden, if I'm creating imbalances, rebalancing, creating imbalances, this just creates a trend. Obviously, so you see, it's not only sort of a phrase or a word, that's an imbalance, that's a rebalance. No, it aligns pretty perfectly on what the price action is doing naturally, which is either it's trending onto the upside, either onto the downside, or sometimes it's also consolidating. But even in those consolidating parts of the entire price action, you're still going to be having small little up and down trends. So once again, creating imbalance, rebalancing, and then from this point on, we have to basically ask ourselves if we're still going to go for that low or for that high. But once again, the high time frame bias aligned, so we are just going to be trading onto the upside to the range high, but also even, I would say, potentially all the way to the previous day high. I'm going to be marking it out. It's going to be the previous day high. Let's go to the 50-minute time frame, and I'll keep it as so. These are going to be relative equal highs, I just realized, so that's just a bonus for us. That's going to be relative equal high. Let's put it to the top and to the right. So that's just another reason on why we are going to be trading onto the upside. Now, the next thing that just for a lot of people are going to be looking very confusing. They'll be saying, nah, man, I don't trust this. They believe that now we are just going to trade on to the downside just because we're doing it right now. This is exactly what the market wants you to do. He wants you to get scared up. He wants you to believe that we're going to go into the downside. And the next thing you know, you're going to be taking a short just for the price action to completely destroy and reverse on you. And well, yeah, that situation has happened to you a lot of times. So instead, we're going to be identifying the higher time frame bias, which we have previously done. Okay. The higher time frame bias is, once again, this is going to be the previous day high. And yeah, this is pretty much the reason why we are going to be holding ourselves from not taking a bad decision. Now, this is also going to be aligned with the 1-minute time frame as soon as we're going to be starting to see a moving candle. Now, the next thing also, I don't even necessarily plan to trade all the way higher into the relative equal highs there. That's not even my plan. All I'm trying to do is catch upside movement anywhere in this range. Okay, this entire range, basically. This is all that I'm trying to do. So this could be, just trading into the 5-minute BPR or something in between or something, just going to be that high. I don't necessarily want basically the relative equal highs and also the previous day high. Let me mark it out to be traded into. Okay, this is not a requirement for me. So yeah, we're just going to be waiting out for a movement candle and let's see when we're going to be getting it. This could be a potential one, but not really because it has quite of a big wick. So I don't really count it. This is still not a movement candle. I don't consider that a movement candle. Now, but one thing that I like to say often is that if the 3-minute time frame is going to have a movement candle on its own, then that's also valid to take. So you don't have to basically wait it out on the 1 minute. Sometimes 3 1-minute candles are just going to create one big movement candle on the 3-minute time frame. Because if you have like 1 medium candle, 2 medium candle, 3 medium candle sizes on the 1 minute, okay, all of this is 1 minute. Then on the 3-minute, this is going to be already your MC. Okay, so just keep that in mind. Now, as usual, all of this is going to be meaningless basically. everything that I've just shown to you is meaningless if you're not going to be doing this thing, which is going to be documenting it. Okay, you need to document it not only when the trade has played out, you need to document it before it has played out, before you have taken a trade, before you have taken a decision, before you have pressed the buy or sell button. Okay, so we go on, and look, you don't have to overcomplicate it and have like 1 million different nodes. Keep it simple. Okay, so basically I'm going to be quickly turning all of this off real quick, just so we have a better view. Okay, here. Then I'm going to be taking a screenshot. I'll paste it in here. This is going to be the daily. And then I'm just going to say, we need to take out a high or a low. In this case, the high because of the gap. Okay, so now the high time frame bias is identified. Cool. Now basically, we're going to move it onto the 15-minute time frame. We're going to be expanding all of this. And let me actually, yeah, there we go. We have all of our drawings back. On the 15-minute time frame, all of this is going to be our information that we have. Oh, damn, never mind. And now we're just also going to be including that, okay? So, just like that, 15-minute time frame, we don't want to mark it out. Basically, we got the relative equal highs plus the previous day high aligning with higher time frame bias. Okay, this is pretty much all that we do. Now we're also going to be adding a bullet point to this, and from that point on I go onto the 5-minute time frame, and now I just want to look out for a movement candle. So I'm going to basically even draw it out. No, this has to be on the 1-minute time frame. Wait, it's the 1 minute. The movement candle has to look something like this. I would even say like this size is going to be enough. It doesn't have to be extreme. I'm going to be taking a screenshot. I'll paste it in. This is the 1-minute time frame. Okay, now we have done all of our pre-market analysis, because if you could be saying that potentially, okay, I'm going to do the pre-market analysis or write them into this entire, whatever. You don't have to use my journal. You can basically paste it in after the trade has played out. Yes, you can do that, of course, but it's not the same. The kind of things that you're seeing, the kind of information, because see it this way, if there's going to be all of the different information already out there, so the charts have already printed something like that, then you already have a different perception of the market. You're already going to be thinking, ah man, this was obvious. Of course, I should have taken a long when it was, in here instead of when it was in here. You're going to be having these hindsight thoughts basically, but this way, you're going to be saying, you're not going to be inventing some BS. You're only going to be observing and judging based off what's already there. So then when the trade has played out, and especially if you have done a mistake, that way you can go back and see, okay, well, I have done this wrong, I have done this right, I have done this wrong, and this just keeps on going. Because I've also made it in a way, in this entire journal, as you can see, there's going to be a pre-market, and it automatically opens up another day basically for you every single time. And then there's going to be a pre-market, then you're going to be posting in your post-market, and then you have the general where it's going to be a summary. So let me quickly show you how that looks. So let's just see. We have the pre-market, I've already done that. Then we have the post-market, I've journaled that. And then we have the general, which, just general things in that sense. And then we have all notes, which are going to be summarizing all of that basically. So this is the entire plan that I'm operating with. So let's quickly go to our pre-market and have our trading plan in here. Now, if you're not trading with a trading plan, then obviously you don't want to be profitable, most likely. You just don't want it. Okay. Once again, you don't even need to write it out like that. It doesn't have to necessarily be looking like this, but I like to have it. So we're going to be having our movement candle, as we had our high time frame bias, we had our 15-minute range, high and low, and also we had our liquidity rate on the 1-minute time frame. So the last thing is going to be our movement candle. That's the only thing that we're looking out for. Very systematic, a very systematic and also simple approach. What can I say, guys? Starting to see volume. If this entire candle will be just a little bit bigger, then I will be taking it as a movement candle. Okay, man, like I'm sitting here for quite some time now, and we're not getting the kind of candle that we're looking out for. Right now, potentially, we could be doing it, but not really feeling it. Okay, that's going to be our movement candle. As you can see, it's way stronger than any of the previous ones. So we're going to be entering it right. There we go. Stop loss, we're just going to put it in here. And our take profit all the way to the BPR. 5-minute BPR, okay? There we go. We are starting to see some volume in. Stop loss is not going to be at break even yet. Still going to stay into the trade. don't get scared out in these kinds of price action moves. We're trading into this FVG, and now we are potentially going to be bouncing off from it and trading on to the upside again. Guys, I told it to you, okay? This is going to be the classic where most of you are just going to get scared out. You see, we have this entire FVG, we traded into it, and I told it to you before, don't get scared out. Now we are starting to see some reaction, and yes, it could be bouncing off into that FVG one more time, but I expect the move to basically continue now onto the upside. I don't see a reason on why we should continue one more time into these entire ranges in here. Hopefully this is going to be the last push onto the upside. I mean, this shit is going to be taking too long for my preference. Ideally, I like to be in trades, you know, within like 10 minutes, I like to be out. That's like the most ideal scenario, but sometimes you're also going to be having trades like these that are just running and running and running. Come on, man, just a little bit higher. Right into that 5-minute BPR, man. That's all I'm asking for. Just a tiny bit more. And then we are out for the trade. We'll journal the trade, and then yeah, that's pretty much it already. There we go. NQ. Don't do stupid shit. Don't do something fancy now. There we go. So we're doing it. And finally, this one has taken so damn long, man. Like, I don't know. Lately, I mean, in general, I don't like it when the trades are taking this long. I'm not a fan of that. So let me quickly go into here. Now, why is that? Because we're going to be putting the entire trade into my 100K or $100 challenge, basically. And if you want to follow all of the trades that I'm taking in this entire thing, then make sure to join my Discord, as I'm documenting all of the trades, not only in this YouTube channel that you're seeing it right now, but also in here. There we go. This was our live trade. Now from this point on, we are going to be journaling our trade, more importantly, okay? We go in here to our dashboard, log in trade, and then in here, basically just wanna take a screenshot firstly of all of this. Okay, so screenshot, we're going to be putting it in here. There we go. And then I just like to copy the entire thing, okay? Like here, entry, stop loss. It doesn't have to be hard. It has to be simple and uncomplicated. Now we have gone with 0.2. This was NQ. I was, very confident. This was a good trade overall. I have to say that. Ran past the take profit. This is a new feature in Beyond Journal. I'll include this later on once we have traded higher, because as of right now, I don't know how much it is going to trade higher of that. We have looked into the 1 minute, 3 minute, 15, and daily. Okay, that's going to be into that journal. We have all of the different things. Now let us do the entry time. So the entry time was 11:08. There we go. 11:08. And then the exit time was at 11:57. Okay. 11:57. There we go. Now, as of like notes, I wouldn't say patiently. Okay, now what went wrong? I wouldn't say anything went wrong. I would say early exit, but that is not confirmed yet. We have to see if it really runs higher or not. And this is also not a mistake. It is just something that I would like to keep in mind. Now we're going to be selecting all of that. And yeah, that's pretty much the entire thing, okay? Okay, there we go. So we have journaled the entire trade. Now we are still not done. We have to do the homework, guys. Very important. We are going to go back into our notes. We go into the post trade, and we want to keep a couple of different things in mind. So we have this entire thing in here. This is going to be the 1 minute. And I would say waited patiently. Oh, well, I can actually do it like this. I waited patiently on the 1 minute time frame in order for the price action to firstly run higher into the balanced price range, which was on the 5 minute time frame. And then I was really just waiting out for a 1 minute movement candle. From this point on, I took the trade onto the upside. Yeah, I just find it funny. And then the entire thing was created, okay? That's just how I like to do it at times. And then the other note is going to be, there was still more potential for the trade to run onto the upside because there was more liquidity waiting to be taken out higher, such as the range high, such as the relative equal highs, and also the previous day high. But I decided to close the trade once we have traded into the balanced price range. That's why I've basically taken the trade early on. Now you have to basically speak like a robot when you do this, because otherwise it won't really understand it sometimes. Okay, then these are going to be all of our notes. We have journaled all of our trades, and now let's look at the results. We are sitting at 1.6k, our profit factor is 6, and our win rate is currently sitting at 73%. Our average RR is 1.3, and yeah, that's pretty much it. Here you can look at the calendar. As you can see, we have journaled all of these trades. All of them were fully documented in the YouTube channel that you're watching this right now. So with that being said, guys, make sure to click on the video that's on the screen right now to fully understand the strategy. As this is a live trading session, I am not going to be able to explain to you every single detail of the strategy. For that, make sure to click on the video that's on the screen right now. It is going to explain you my way of trading, and then this video after that is going to explain you even more about the strategy. Okay, so click on the one that is on the screen right now, and then this one is also going to give you another video for the entire strategy. So with that being said, guys, remember, always trade based off data and not guesses.